Hello, everybody, and welcome to this episode of Derek Invest. I'm your host, Derek Miller. And wow, this is the third live stream of the day. And the reason I am doing this is because after days like today, there are often a lot of questions. And the first thing I tell everyone is today showed you how well your system functions. What do I mean by that? Well, this is what I mean. When I say today shows you how well your system functions, how did today look for you? Did this catch you completely by surprise? Did it not? Did you know how to handle it when you woke up in the morning? You said, the NASDAQ's down 5.5%, the S&P is down 3.5%. Did you have an action plan? Did you know exactly how you'd handle that? So without jumping onto Twitter or wherever you go to get information, Seeking Alpha or Zero Hedge or wherever you go to get information, did you run there and go, oh, what do I do next? Okay. Because if that is what happened to you when you woke up this morning, that is a huge red flag as to what you're doing. All right. Now, I'm bringing this up because I find that most people look for help after they've made a mistake. And then, well, how do I fix it? Okay. Well, there are ways to do that. And I'm going to talk about that in this live stream right now. Is like, what are the best courses of action? Was today everything it appeared to be, and could it be more? Was it maybe not? What type of system do you have in place that makes you aware of situations like this? And then what do you do about it? How do you deal with it? And because there's a lot of people right now that are buried, whether they want to admit it or not, they're buried and they don't know what to do. And you'll see a lot of stuff on like financial Twitter, FinTwit Twitter. You'll see a lot of articles, and the market always goes up. And when you're still hearing that, I hate it when I hear that. First off, it's not true. Second off, most people give back more than they make, even though that's never admitted. There's just the most interesting fact in the world to me was that from 1990 to the year 2000, the S&P 500 averaged 11%. So the index itself averaged 11%. The average person investing in that index averaged 1.2%. You can look that study up. It's everywhere. It's a well-known study. So if that is what the average investor does during markets that effectively didn't have really anything go wrong in them, what do you think happens in markets that are like this one? What do you think happens when this stuff starts playing out, right? You don't have to be a genius to figure this out. Now, I also have the benefit of having been a professional for 25 years. I've looked over probably upwards of 1,000 different lifetimes and what they did with their money and reviewing their portfolio and investments and how they handled this situation and that situation. So I already know that most people mess it up, right? And if that's hard for you to hear, I guess it's hard for you to hear. But it's better to hear that and accept it and then decide you're going to fix it than to hear that, deny it, keep doing what you're doing. And when the market comes back and when things go back to normal, whatever, you say, I told you so, if that's in fact what happens. I'll show you what I see in this market. And what I do this morning wasn't, and for my students this morning, wasn't anything to shake a stick at. It was no, when you wake up to mornings like that, you're always going to have reaction. Like for me, it's just more or less like, wow. So usually what I like to do in the morning, because I do some short-term, pretty high frequency futures trading. Today, I just sit it out. I'm a risk guy. Look, I avoid massive risks. Days like today are massive risks. Now, had I been in that market in futures, and I would never be, right? I don't play overnights, by the way. Other people do. There's times where it makes sense, times when it doesn't. Right now, it just doesn't. There's not enough action. It's too light. So it's just a boxing match, the first 15, 20 minutes of the market opening, which I avoid. I don't even get in there till I'm on the Pacific coast. I don't get in there till 7 a.m. So half an hour after the market's open, usually I'll start futures trading because I don't care about those first 30 minutes of whack jobs that are gambling and throwing dice. They can throw dice. I don't throw dice. I'm an investor. I make money. That's what I'm paid to do. And so I came on today as a means to help, not lecture. So if you do find yourself in the position where you woke up and you really didn't know what to do, and this was unexpected and shocking to you emotionally, first off, you're not only are you not alone, you're among the 99%, 99.5% of market participants, whether they're professional traders, whether they're professional money managers, whether they are retail. It doesn't matter. You're among the 99.5. On the other hand, I learned how to be a professional investor through 08 and 09. Started in 04, learned through 08 and 09. That particular market made me. So now I learned how to be aware of where it can go in the upside, where it can go the downside, running market neutral with, obviously, I will lean into a particular direction that I believe the market's going. And I had to come up with a system that works day in, day out, that is not based on indicators or Fibonacci or moving averages or any of that stuff. Those things work until they don't, then they blow you up. I've watched it a million times, and I've watched it with guys with very big accounts, right? Guys that are in there swinging around 50 million a day. I watch their accounts. I mean, I know guys that have blown up like, I won't get into it. Let me just tell you that stuff doesn't work. Those guys didn't listen because they had a lot of money. And in this world, that, if you have a lot of money, you believe that you're really good at what you do. And no matter what, no matter how much you lose, no matter how much you get back, you're still good at what you did. You just got caught because you're just really not good at what you do. You weren't prepared. And what I'm here to do is help people get prepared. So I want to, if you got caught, it happens. Look, I blew up my first investment account 3 times over a 5-year period. It took me 10 years and probably 60 to 70 hours a week to be what I would call a master in investing, setting up actual portfolios, and then trading short-term, intermediate term, and long-term. There's a lot in there, guys. You're not learning that on YouTube, right? But with people like me guiding you and following people like me, you elevate your chances to have real success. And remember something. Investing isn't just about investments. And this is where I see a lot of information on the internet now, which is great. I love it, right? There's like X market makers, and there's this options guy, and there's these these guys, and they're like, I made this many 100 million. I'm not telling you, they're not telling you the truth. That might be exactly what they did at their desk. That might be exactly what they did. How to set up a human's portfolio, investment risk, investment management, risk management, cash management to run for an actual human that has a set amount of money, so money doesn't just keep piling in year over year. Those are 2 different worlds, right? The key to all, like with the internet, we all know we have all the information. There's no information that is hidden from you. If you think there's some hidden information, I don't know what world you live in. I promise you, there's no shadow this and dark pool that. All information is completely available to everybody. But if you don't know how to sort and structure that information into rules on how you're going to financially plan for your life, and then set an investment plan into place and into practice with all of this information, what good is that information? I mean, if I gave you the keys to how the world works, you're born and raised in the US, you speak English, fluent in English, like you're a linguistics master in English, and I have the book right here, and I'm gonna hand it to you. This is the keys to the kingdom. This is how the universe works. Once you read this, you will be God. But it's written in Mandarin. Well, there's all the information that you could ever need. Ever. There's no more information. I'm giving it to you. But it's in Mandarin. Uh-oh. That's what all this information is, folks. All this information you're getting. I love putting out investments. And if you look at my charts, there's no vague, conceptual, this will happen or that could happen or that. So I can always come back and be right. It is dated on the day that I'm telling you which direction it's going to go. It gives you a price target, and it gives you a date for that target. I do that because I know what I'm doing. You have a lot of guys pumping out a lot of information that really is truly useless. Even they don't know when it will work and when it won't work, which is why they're not giving you target dates, target prices. They're not telling you when that was created. They're not telling you what they're at. Even honestly, they're not even telling you how to structure your portfolio. If you're only trading the S&P 500, I don't know what world you live in. I don't know how you're managing risk. So let's talk about today and what it meant. So here's the thing. Start of the day, the NASDAQ is your leading index right now, right? Led by artificial intelligence, followed very closely by semiconductors. That's your leader in the market. So naturally, when you woke up this morning, the NASDAQ was down 5.5%. And the S&P, which is your lagging index, the index that's following, was down less. It was only down 3. Only, right? Here's the close of the day. The NASDAQ closes down 3. The S&P closes down 3. Your leading index recovered nearly 50% of that gap down. That is a strong signal. That signifies strength. Also, the market has been falling. We were already down 10% before the market opened this morning. And then there's a giant gap down 5.5%. Gaps down in a downward trending market, such as this one, are the best way to induce fear into people that don't have a structured, systematic investment plan. Retail investors, trend followers, all get eaten up. But gaps are very positive when you realize that they are doing that. Institutional money, big money. When I say they, I mean institutional money. The institutional footprints on today are monstrous. We did what? Double the volume in both the major indexes. So institutional footprints are everywhere. They're gapping it down, which is a way to institute fear. Because remember something, if you're an institution and you're working at a trading desk and something's trading at 400, do you want it to fall 5.5% down to 380? So the next place you can sell is at 380 instead of 400? No. And you're in control of most of the supply. So you're in a lot of control of the direction that's going to flow as well. That's why gaps fill. And what the gaps fill because those major desks, they don't want to sell at 380. They want to sell at 400. So if they really want to sell, they're going to fill that gap back up to that 400 mark. Then they'll sell. And by the way, they'll trickle it out so they can keep that price as high as possible for as long as possible. So there was definitely, the gap down is definitely an indication that fear is intentionally trying to be propagated on investors and traders, market participants. The fact that the leading index recovered nearly 50% of the gap down today on 100% more volume, average volume than we've been having, is also positive. I would also note for you crypto guys out there that Bitcoin being that crypto market is its own asset class as far as I'm concerned. And that particular asset class is the riskiest asset class in the world at the moment. And that asset class started down 20% and finished down only 9%. So it also recovered half. Another very strong signal. Very strong. Let's talk about something else that was a strong signal. Gold went nowhere. It started the market down and finished down. Your 20-year treasury was up, I think, like 1% at the end of the day. I had been talking treasuries a few weeks ago, picking up that ETF TLT that trades at 91.80. The 20-year treasury was at 91.80. Picking that up, and you can look back for yourself, or I can throw up a chart to coincide with this video. That was being bought at 91.80. That finished up today about 1%. A couple of stocks that we had to the upside, like CrowdStrike and Next Era Energy, I think they both finished positive today. There were positives there today, and then some of my shorts obviously filled and hit home today, so that was nice. But that is how running a balanced portfolio is, having a diversified number of investments. And at the same time, managing the cash and managing the risk within that portfolio as a whole, paying attention to taxation and paying attention to index levels, even if you're trading individual positions. All right. And that protects you. And speaking of which, I'm going to mention that I have a mentorship course starting in 2 weeks. If today caught you off guard, if this was a surprise, if this was shocking, you got to get into that mentorship course. Okay. I'm going to put up my email here. And for those of you on LinkedIn, I'm going to put up my Twitter as well. There we go. Derek Me 752-636-05 is my Twitter. Feel free, jump over there and take a look at my accuracy rate. You will be impressed. What I do transcends what asset you work within, and also what you come away with is something built for you, because I take the time to get to know you. And let me tell you that every investor and trader in the world, this doesn't take the time you're told that it does. I know you're told this is complex, it's complicated, you'll never be able to figure it out. Maybe on your own, you'd have to spend the time I spent, which is the last 25 years. But with someone like me guiding you through the practice, it doesn't take nearly that much time. And then you're getting information from me on a weekly basis that will be more than enough for you to do this on your own. If you know how to answer emails and use the internet, you have the knowledge base and capacity to do this for yourself by spending as little as an hour or two a week. Not getting caught by things like today. All right. I hope that was helpful. Thank you so much for tuning in. I will see you all tomorrow morning. I will do a breakdown of the markets and what I see coming. And if I find something else interesting, I'll do that as well. Remember, it's just not all about investments, everybody. It's just not all about what investment should you buy. It's just not about all this information that, by the way, is everywhere. You have to take that information and you have to systematize it. You have to arrange it and order it into importance and into rules of an investment and financial system built for yourself. And if you do that, I don't care if you want to day trade. I don't care if you're looking to be a swing trader. I don't care if you're only looking to go long term. All right. My mentorship course, I don't care if you're a professional floor trader and now you're doing it for yourself. I don't care what you did for a living. Okay. What I do will help you to sort and organize your information into something that is a more advanced system that brings your risk down as far as humanly possible, while performance, it won't lag. Let's put it that way. It will not lag. Thank you all so much for tuning in. Remember, smile. All right. Even on tough days, they're good days. Get outside, take a walk in the sun. As you can see, I'm outside sweating right now. Fake it till you make it, everybody. You haven't failed yet. I know that because you're here and you're watching. Please reach out to me, dmiller@prometheaninvesting.com. If you're interested in the mentorship course, or for you more serious guys, one-on-one sessions are the most amazing thing you can do for yourself. Really, the size of your current account doesn't mean all that much, right? You don't learn how to, you don't say, hey, I'm going to go surfing tomorrow out at Pipe. And then someone says, well, you know how to surf? Well, no, I don't know how to surf. Do you know how to swim? No, I don't know how to swim. Well, what are you doing? I'll learn when I get out there. I'm just going to goof around, right? I just goof around on a few waves at Pipe. That's not a good idea. And neither is fooling around in the markets and saying that you'll learn as you invest. These are foolish notions that you would never do in any other part of your life, and they are just as serious. Thank you, everybody, so much. Every day above ground's a good day. I'll see you tomorrow. Good morning, everybody, and welcome to today's episode of Derek Invests. I'm your host, Derek Miller. I have done a live video already this morning based on what's going on in the stock market, so I wanted to address Bitcoin. Should you be buying Bitcoin? Well, the first thing you need to ask yourself is, should you have ever been buying Bitcoin? Do you understand what it is? And if you do, and you say, hey, I'm a buyer, are you a hodler? Do you believe in hodl? If you believe in hodl, I would say that right now is not a great time for Bitcoin, simply because you plan on holding forever. From the way I understand it, I don't believe in that methodology at all. I own crypto as part of my overall portfolio. And as I stated back in, I don't know, a couple months ago when the ETF came out and volume shot through the roof in Bitcoin, and it shot through the roof up at 68,000. I told you that I'm a seller, and I sold out, and I still am. I'm still out until this morning. I'm going to go over with you, for those of you that actually manage your assets the way you should. Let's get into it. Let's talk about crypto, okay? And the reason I'm talking about Bitcoin is because Bitcoin is actually the gold standard. And when I say the gold standard, those of you that follow me and watch my live stream on Friday know why Bitcoin is the gold standard, because Bitcoin is going to be the standard by which currencies in the crypto market are based. At least that is my belief system. That's what I believe. Bitcoin is a property. It is not a currency. So I believe that the property of Bitcoin is going to be the gold standard of our current fiat system. Used to have the gold standard. I believe that is what Bitcoin will be, is the gold standard for those cryptocurrencies to actually transact business in. So should you be a buyer of Bitcoin? Well, if you're caught right now with your pants down, if this is a terrifying moment, first thing to do is calm down. The first thing you do is take a breath, okay? And you admit to yourself where you may have gone wrong. Maybe you just got a little too excited. You had a little FOMO, fear of missing out. And now what's happening is pain receptors are going off everywhere. And you're imagining the worst case possible fallout from these coins, getting hit. Because if Bitcoin's getting hit by 20, some of those shit coins are getting hit by 80, and I know it. So the first rule you just learned about investing, if you own those shit coins, is money easily gotten is money easily given back. And Bitcoin has displayed this before, but never in this manner, because right now we are way over leveraged in all markets. Trend following has become a disease. People believe that AI and machine and algorithms are the way to actually place, invest, and trade their money, which is absolutely absurd. Those algorithms, machines, whatever, are going to pile on to whatever direction the market's going, which is really scary for days like today, because does the possibility exist that everybody decides, oh, look, this is a market you short in, and they dogpile on? It's a possibility. Do I think that is going on right now? No, it doesn't appear to be going on. So the first thing you do is you calm down. The second thing you do is you do an evaluation of Bitcoin in a proper manner. The first thing is, when there's any sort of global economic event that would cause even something like crypto to crash, you have to look at the major markets of the world. For you crypto guys out there, if you're not watching the S&P 500 and the NASDAQ, you're making a huge mistake. This is where many of the major players in the crypto world, for example, in your world, have a lot of their money and a ton of vested interest, okay? I know that the goal of crypto is someday to replace the current system with the crypto system. I'm not telling you that's not going to happen, but that's going to take generations. That's not happening overnight. So they are still very steeped in our current reality, and they're steeped in what they believe to be our future reality, and I think that it probably is as well. However, that doesn't negate the fact that because those two markets they're in fact correlated because of that fact. So it doesn't negate the fact that that being unaware of what's going on in the S&P and the NASDAQ will directly affect crypto. If you're unaware of that, you're blindly unaware of that, because basically the crypto market now is just the riskiest asset class on the planet. And that is a fact. I can show you I can show you proof after proof after proof that is the riskiest asset on the planet right now that's actually being managed professionally. So, first thing, calm down. If you're caught in this trade, this sucks. Pain sucks. It's awful. All right? It doesn't mean it's over. But let's take a look at Bitcoin. Is this some sort of a crash? Is this going to end, the crypto world? Is going to end Bitcoin? What does that look like? Well, the best way to know what that looks like is to look at traditional markets and then say, hey, do these crypto markets have anything in common? Because most of the major players here are the major players there. So let's go ahead and do that. I'm gonna share my screen with you here real quickly. All right, now this is Bitcoin. Well, I have up a daily chart at the moment, but what we are going to do is we're going to go ahead and jump over to the S&P, because that's what I want you to see. All right. So I'm going to zoom out a little bit so we can get a good picture. See how ugly it is over there as well? Now, the numbers don't add up, right? I mean, like, let's face it, down 20%, down 3.5% are two different worlds. And if you think, hey, I can handle more risk than those stock market guys, that is a foolish way of thinking about investments. There's no ego in investments. And being down 20% is a terrible, terrible mistake that could have been and should have been hedged. Let's just be honest. Now, let's go take a look at what the last global economic crisis was, and that's all the way back in 08. So we're going to scroll back. We're going to take a look at 08, and what we're going to look for, what we want to do is we want to prove, if we can, that right now is like 08. Even though I've told you that it is not, let's go take a look and let's just see how do they compare? How does today's market in crypto compare with a true global economic event? So we'll go back to say, where are we now? 06? Okay, that's fine. Here we are in 06. Down here at the bottom is volume, everybody. This is your volume, okay? Why does volume matter? Volume, my friends, is the indication of institution, the people that run the world, institution, the big money guys, when they get highly active in any market, whether it's Bitcoin, S&P, NASDAQ, small caps, U.S. Treasuries, when they get active, it's identifiable because they can't hide their footprint. Their footprint is these huge pieces of volume, this massive level of trading activity. So let's go back, and we're now looking at, this is May of 06. Where are we at here? July of 06. Let's scroll forward. All right. Here we go. There's 07. Look at the spike in volume. This is where the big guys, that's February of 2007, by the way. That is a year and a half before the September of 08 crash, okay? Look at the spike in volume there compared to what's behind it. All right, I'll put a horizontal line there. This is average volume behind that 07 mark. Look what volume does, and it stays there. You see that? It stays elevated. And watch this. Boom. Now, you are in July of 07. This is still 07. Okay, this is still 07. See the trading activity? That was the previous trading activity. This is 07 trading activity. Huh, both of them wiped off the map. Look at that. August of 07. Look at the volume, everybody. That's 08. This is what it looks like during a global economic event. Okay? Volume goes through the roof. Why? Is it just we're not looking at moving averages here, which shift at all times. What we're looking at is volume, trading activity, how many people are involved. The only people that can make volume go from where this blue line is to this are the big boys, the guys that run the world, the institutional financiers, if you will. Okay? And look at the difference. This is not like a tiny piece of market data. Look at this. Go all the way back. Look. Look at that. This is years. This is what? January of 06. I can take this all the way back to 99, and this will work all the way back to the 80s. Look at that. Look at the level of volume that's increased. Again, this is 06, 05, 04, 03, all the way back, average volume levels. This is the global economic crash that occurred, okay? So let's zoom in today for Bitcoin, and let's take a look at what Bitcoin looks like. So we're going to go over here, Bitcoin. And if people were bailing out of Bitcoin in droves, especially people that run the Bitcoin market, we should be able to find something in volume that signifies a massive shift in participation or a lack of participation. So what I want to do is I'm going to zoom out just a little bit to give you a broader picture. Here we go. This takes you back to 2020, okay? Because this is futures. Here's 2021. Here's 2022. Is there anywhere on this chart that stands out? I would say right here does. Look at that. That's the big guys. This is the big guys. Does anything stand out right now? No, it does not. So when you have a giant gap down, and I hope you're familiar with what gaps are, because your market, not yours, but the crypto market moves very, very similar to the stock market now because they have the same players in them. See that big gap? Right there, that big hole right there. See that? That gap, and especially a gap down from highs, is an indicator of fear. So that is used to drive fear into a market. That is used to dump markets. It's very easy to do in Bitcoin right now because whether you like to accept it or not, the Bitcoin market is very, very small on a global scale. All of the crypto market is very, very small on a global scale. And there's very few people running those markets. And this is typical market manipulation. This is a gap down to institute a ton of fear, which would lead me to believe that right now, I would say, well, this is no fun and you have every right to be afraid. And if you've gotten yourself over leveraged in Bitcoin, or Bitcoin is the only asset you're trading, or crypto is the only asset you're trading, you're making a huge mistake. This should not be the only asset you trade under any circumstance. This is one asset of many. For example, if you own the treasuries right now and you had bought them when I was buying them, the 20-year treasury, the ETF TLT at 91.80, you can check me out. If you had bought that right now, this wouldn't feel quite as bad, right? Because that's up 10% in the last week. You're also getting 4% in interest. So this 17.5% drop really would feel more like a 3% drop to your portfolio. And that's only if you own those two things, right? It doesn't matter. Properly managing money means owning different asset classes. Crypto is one asset class. Now, where should crypto have a bounce? Where should Bitcoin have a bounce? Well, if you are just your standard operating kind of market guy, it should be right in here. It should be around 48,000, okay? Which it came close to this morning. Where did it get to? The low was 49,365. If you're a guy like me who is not greedy, you know that if you're not a hodler, which I am not, I do not hodl anything, okay? That is for suckers and billionaires. If you're not a billionaire and you're not a sucker, you shouldn't be hodling. That will just get your money eaten up, gobble, 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 every time. Oh, I don't care. I have held Bitcoin from 2,000 to 20,000, and it came back to 2,000, and then it went to 70,000. I will keep holding. You have missed so much opportunity. It is unbelievable, and it's opportunity that's easily managed. So that is a mistake. So let's talk about it. Is Bitcoin in a crisis right now? It doesn't appear so, no. It does not appear that Bitcoin is in a crisis right now. I wanted to show you that so you knew, because these asset classes are all related. If you think that the crypto world and the traditional financial world are not completely intertwined at this point, you're missing the boat, because they are. That is going to be a new system. I do believe it will take the place of our current system, but I also believe it's going to take generations. So it's a system you should be in, but you need to be managing money outside of that crypto world as well. And if you were managing money outside that crypto world, and you were following the three pillars of investing: cash management, risk management, and investment management. Investments are, what investment should you own right now? This right here is pillar number one. And right now, what you should have been owning was 20-year treasuries. You should have been shorting oil. You should have been shorting the S&P and the NASDAQ through Friday. Right now, you should be a buyer, right? As far as crypto goes, what should you have been doing? You should have sold out when it was at 70,000. Now it's at 50. You should be scaling back in. Now, look, when I say buying, that just means the investments. How you buy those investments, you have cash management and risk management. Cash management is how much of your cash are you putting into those investments and how much do you have on hand? I personally had over 50% on hand coming into this, right? So that's your cash management. And then your risk management is, how much of this am I buying? So do you build positions to a 10%? To a 20%, and you should not exceed 20% in any given position. Some guys, if they're index traders, will go to 25% positions, which is totally fine if you're just an index trader. So, but if you don't know what I'm talking about right now, and you're not managing money that way, I have a mentorship course starting in 2 weeks, okay? I have a mentorship course starting in 2 weeks that teaches this stuff, all right? You wouldn't have got caught with your pants down today. Today would not feel nearly as ugly as it probably does. So should I buy Bitcoin? The answer for me personally is yes. For me personally, yes. And then how much is based on who you are. What is your cash management? How much cash do you have on hand? What is your investment management? Are you spread out? Do you own treasuries? Are you short oil? Were you short the markets through Friday? I covered all those positions Friday. Hey, today would have been a nice profitable day for shorts, but I didn't hold them anymore. I sold them on Friday. Oh, well. But now I'm a buyer. And that's risk management. So how much of those are you buying? What size positions do you build? Me personally, I build my positions out to either a 10% position or a 25% position at a time, depending on what it is. For me, my treasury position is a 25% position. It's all bought in. I am going to be selling off portions of that position today. And I'm going to be buying into, so I spread out my investments through the stock market and through the crypto market. I only participate in Bitcoin in the crypto market. And so today is definitely a buying opportunity for me. I have been sitting out for a little over 6 weeks now. I mean, I got out around 68,000. So I will start buying in today. I know I showed you that gap. That is what I'll personally be looking for, because I do realize that there is the distinct possibility in the cloud over Bitcoin that as it is more widely accepted, the government, the powers that be, will completely want to take it over. And if you drop Bitcoin's price down to say 8,000, that'll take out the profitability of the miners. They can then come in and potentially buy the mining companies if they're not wealthy enough to hold out. People can only hold out for so long, folks. I know that's hard to believe, but the fact of the matter is, in 2008, Goldman Sachs had to borrow money from Warren Buffett so it didn't go under. Goldman Sachs had to borrow money from Warren Buffett so that it didn't go under, out of existence. Okay? So if you think those miners can hold on indefinitely, you're wrong, which means there is always that undercurrent or overcurrent or whatever you call it. So I'm very cautious in the crypto world. I hope this helped you. I am starting my mentorship, as I said, in a couple of weeks. And if you are interested in that mentorship, here is my Twitter handle, Derek Me 752-636-05. That's my Twitter handle. You can jump on there, read a little bit about it. I am on LinkedIn as the Honest Trader. Also, my email is dmiller@prometheaninvesting.com. You can get in touch with me there. My direct Gmail email account is millerderek091@gmail. You can email me there as well. Thank you so much for joining me. I hope you enjoyed this. If you have questions, please get in touch. Be honest with yourself, everybody. Don't sit there and say you're going to hodl. That is not a way to manage investments. It's not a way to manage your life. It's not a way to manage investments. All right? Like, it's not a way to manage your future. I'm sorry, I said investments twice. Remember, all right, you didn't fail today if you're in a bad spot. This is an ugly, mean learning lesson. And as part of the curve, I've been doing this for 25 years. I lost my account 3 times over. My whole account 3 times over, learning how to do this stuff. That was over a decade. So if you've been doing this for 4 years in what is amounted to nothing but a bull market, and this was a wake-up call, use it as a wake-up call. All right? Hey, listen, remember, if you're not good up here, you're not good anywhere. Get outside, see the sun today, smile. You may have to fake this hard today, right? But if you do, fake it. Fake it until it becomes real, all right? And don't lie to yourself. That's the key to success in life, is honesty with yourself. Be honest about how you got in this position. And if you need the help, I have a mentorship starting. Look at it. Join it. This didn't have to be an ugly day for you. This could be a profit. This could have been a very profitable day for you. Remember that. And that's not being braggadocious. That is just 25 years of experience in actually managing money, right? I'm just not a futures guy. I'm just not an options guy. I'm just not a this guy or a that guy, right? I manage an overall portfolio that takes advantage of taxation. It takes advantage of investments. I'm conscious of risk management, cash management, all things that the traditional financial brokers do not do and have no idea how to do. And right now they're just telling everybody, no one saw this coming. Nobody did. And if your broker is saying that to you right now, or your advisor saying that to you, that is untrue. Okay. So thank you so much. Good morning, everybody, and welcome to this episode of Derek Invest. I'm your host, Derek Miller. So listen, this is not 2008. All right. Everybody is afraid this morning, it seems. Okay. My students are not afraid. Why? Well, we've been reviewing this stuff over what it looks like when a global economic downturn is happening, how that is set up, what that setup looks like. In fact, I just did this on Friday because, as I've been talking about for months, all of this trend following, algorithmic trading, machine trading was going to lead to days like this. This was inevitable. And that is why I have been running a neutral portfolio that has as much long and as much short. Does that mean I don't make money when the market's going up? No. Go look at my accuracy. Go look at the stuff that I pick for short. I mean, it doesn't take down markets to have short positions that make you money along with long positions. But those short positions, they will save your butt now that we live in this new world, because when you have a day like today, you're not panicked. Okay. But let's just get back to the matter at hand, and then we'll talk about that, because there's a few things you need to do right now. And the first is calm down. All right. This isn't what it appears to be, because this is price action. All right. Let me tell you, and I tell my students this all the time, price action manipulated at high speed with high volume is either used to institute greed and fear. And the fact of the matter is, this market has been running on greed for a very long time, and it's very, very easy for a true professional to have seen that this entire time. You're mocking Charlie Munger, you're mocking Warren Buffett, you're mocking all these guys, and their levels of cash are through the roof. Why are their levels of cash through the roof? Because we're gapping up to new highs. And when you gap up to a new high, this is one of the greatest ways, this is one of the greatest tactics to institute greed, excitement, FOMO, call it what you want, okay? What's a great way to institute fear? Contrarily, huge gaps down. All right. So let's take a look real quick. Let's revisit why this is not 2008 and what 2008 looks like. So for those of you that are just tuning in this morning, you can actually see it. All right. And again, stay calm right now. This is not the time to get panicked. So that's my light. That's the guys mowing the golf course behind me. Let's go ahead and screen share this so you can see for yourself. And I think Bitcoin's going to come up. So a lot of you crypto guys are going to be afraid too, but I've been discussing this with you as well. Since those ETFs came out, I've been talking to you about the volume that was sitting up here at these highs. This in crypto, for example, this looks a little different than it does in the stock market. I will talk about that today as well. Let's head on over. Let's take a look at what a global economic downturn actually looks like, so that you can see the setup for an actual economic downturn, and not what we have today, which is, very scary price action. I mean, very, very scary price action. I'm not downplaying how scary the price action is, but let me show you what a setup for a true market slowdown looks like. Here we are in 07, okay? We're going to roll forward. This is volume at the bottom, everybody. This is volume. Whoops. I hate that I just accidentally bumped that. I have to scroll back. Sorry. All right. Let's scroll back to 07. Volume is right here, and I apologize if I'm not as entertaining as some of these young guys, but I'm gonna teach. I mean, I know what I'm doing a hell of a lot better, and so that's what really matters. And that's the funny thing about the new social media trend. It's all about the guy that's the most entertaining, and the thing is, this is your money. You don't need entertainment with your money. This is what it looks like. This is just February of 07, okay? Do you see the jump in volume? This is where real fear comes in, all right? And then it runs. Look at that. From 07, look how far up it still runs. But see how the volume stepped up and it never really gave in. If you look at the volume back here compared to the volume of 07, 07 never dropped volume. From February of 07, volume went up and just continued. And look at it. It just continues and continues and continues until you get to a point where it is dwarfed. And this is, I just did this on Friday, so I don't want to do this too much. This is July and August of 2007. And even this volume, see how big that volume looks compared to the volume in the background? Watch this, though. Here, let's put a rectangle here so you can remember where that is. All right. And why does volume matter? Volume is trading activity, and trading activity indicates the real fear levels of the people, the institutional money, the people that run the world, and where they have their money, where they put their money, and what they're doing with their money. Look what happened to that volume. Look at this. See that? Now you start stepping into late 07. That volume's dwarfed. It's nothing. Volume picks up. Look at that. This is still 2007, folks. This isn't 2008 when the crash happened. Look at how much this volume has shrunk. So let's go into this one now. Again, so this is huge. Volume still has not shrunk since 2007. And guess what? What are we doing, everybody? What's happening with price? We are bouncing around at a high. Look at this. Look. You're bouncing around. You see that? Now scroll over. Oh, here we go. Now we've hit 08. Or is it December? Look at that. See in December of 07? How long did it take to get there? It took from May of 07 to December of 07 on just volume levels. Look at the way the volume picks up. Look at this. Normal. Whoa, what is this? Holy smokes. At high prices. Whoa, what the heck is this? Again, at those same high prices, everybody. Oh my gosh. Here we go. We're in January of 08. Look at the volume still. Look at the volume. May of 08. Oh my gosh. June of 08. August of 08. Boom. Look at this volume. Look at the volume. It's incredible. And the low was March 9th. Right there. But that is what happens. This volume back here, actually, all of this gets absolutely dwarfed. This is an 07, everybody. This is when those of us that knew we were doing were getting out of the way. All right. Including Warren Buffett, by the way. Just FYI about Buffett and everybody who just claims like these old guys don't know what they're doing. Believe me, they know what they're doing. Now, I want to walk you through right now on the S&P 500. All right, here we go. This is taking you matter. It doesn't matter. We're not in this scenario. This is February of 2023. Watch the volume at the bottom as price goes. Is volume doing anything? Nope. Maybe you have a minor adjustment with that bar right there, but nothing that matters. Nope. And here we are. And this is what I've been warning everybody about right now. There's just a lack of interest at these high prices. And there is a genuine lack of interest up here at these high prices. I mean, no one was interested. I've been talking about this. Same thing for the NASDAQ. Same thing for the NASDAQ. Look, you see the volume here? There's just no interest in prices at these levels. Nobody was buying at these levels. And now you're just returning to a previous resistance level, very normal. And it looks like it'll be on absolutely screaming volume. It looks like it's going to be, because you're down here at 420, 422 and a half. Okay. So you're almost heading to the next support level. You zoom out a little bit. Let's zoom out a little bit on a weekly chart. You see what that weekly chart looks like? This is just a lack of interest in price. Okay. Let's roll it over. Let's zoom in just a little bit. I mean, the reality is down here at 400, which I have been talking about for a very long time, and for a long time in the market. It's been about a couple of months. I've been talking about the 400 level. Absolutely needs revisited for this to be a healthy rising market. And the way the trend followers are going now, I'm going to jump out of this share. I hope that shows you the difference between a 2008 and a now. I hope that shows you a difference. Okay. If any of you have been caught with your pants down in this, like, this is brutal and absolutely miserable. Sun's coming up. It's beautiful. I love it. For those of you caught with your pants down in this, and you are right now saying, what do I do? Well, the first things you do is, one, you calm down and realize that it's not 2008. It's not 2008. Wicked price action. Wicked. I sound like I'm from the Northeast, like I'm from Boston. That's probably a terrible accent. But you don't panic. This isn't 2008. Massive price action with a lack of volume at highs is traditionally nothing more than massive levels of fear, right? They're going to talk about liquidity, unwinding leverage. There's going to be all sorts of conversation today. The truth is, this was identifiable. Do not let yourself off the hook, okay? On Friday, I was calling for on the QQQ that now sits down at whatever I just said. It's roughly 425. That sits down at 425. I was calling for a 450 level. My goodness, that we hit. We hit it Friday because we hit like 446 and a half. And I said, that's it. Close your shorts, sell your puts, buy. And listen to me. I stand by what I said. However, you have to understand something. I was short that entire time. So it went from 505 to 446 and a half. I was short. Okay. I run a neutral portfolio. So I'm long and I'm short all the time. All right. And what am I going to do this morning? I'm going to build on that long position. Now, if you're not doing these things and you're following someone that's like NVIDIA and Amazon and Apple, and I know how many of you guys are, because I watch Twitter every day and it blows my mind at what's being considered an expert. But it's always blown my mind. I've been doing this for 25 years. All right. I mean, I saw people talking about that they're professional futures traders, and that they were down 200 basis points already in their futures account. And some of you are following this human. Are you out of your mind? I am a futures trader too. And guess what I'm going to do with futures this morning? Nothing. Why? There's way too much risk right now. Are you out of your mind? I'm doing nothing with futures this morning. You have to let things like this settle out a little bit. Do you know what I do in the first 15 minutes of a futures account every single morning? Nothing. I do nothing. That's a boxing match, the first 15, sometimes 20 minutes. There is no reason to be involved in that mess. Let them fight each other out and burn each other and hurt each other and, give each other swelled eyes. And then once that's over, you can clearly see the trend of the day. You jump on it. You grab your 100 basis points. You grab, whatever. I don't know what your marker is. And then you just move. And then you're done. But don't get involved in these boxing matches. And for these guys that are saying that none of this was something that you could see coming, that's not true at all. This is exactly what you're going to get with all of this massive trend following. Okay. Now, I've talked about AI before, and they were comparing the AI to a bubble. And so I did a whole series on why this AI move isn't a bubble. PEs are nowhere near where they should be. Optimism's nowhere near where it should be. Now, I've also told you that I don't believe AI is 1/100th as powerful as claimed. And I stand by that. I don't. And I also stand by the fact that it takes, in many circumstances, it takes jobs from human beings. I don't care if it's a call center in the Philippines, or if it is some accounting guy that would be sitting there going through transactions in the United States. People need jobs. Humans need jobs to survive. Oh, no human wants this job. Let me tell you something. Just go meet a guy who has a family and has been out of work and ask him if he'll take that job. He will. So, and I digress by saying that, but I want that to be known. That is my opinion. But I also don't believe it's anywhere near as powerful as you're told. I don't personally believe that the internet does exactly what people tell you it does. I think a lot of it is not accurate. Okay. And so let's talk about the next thing you do. So now we've realized it's not 2008, and you should go watch my lives from Friday if you need to revisit this subject, because I go in depth for 30 minutes and I show you charts of now and then and this and that, because I've been waiting for something like this to happen and am more than prepared for it with my students. This is not anything that blows us away. We were ready for this. We were prepared for this. You should always be prepared for these types of things when you're in a market like we're in. And if you caught with your pants down, realize it's not 2008, calm down. What happens if you've already got yourself buried in this trade? Well, I hope you had proper cash management so that you can continue. I hope I warned about this buying the dip mentality that you run out of cash. I hope that's not you. And I hope that you can buy into this, because the one thing I'll do this morning, and again, I have a long portion of my portfolio and I have a short portion of my portfolio, meaning long-term and short-term, to take advantage of gains, right? And my students do too. This is what I teach. So hopefully that you only need to go over to your short-term money. And what you should be doing this morning is you should be building into a long position. Hopefully you're not just, you should always be running a portfolio with nearly 50% cash in it, especially in markets like this. And know that will not harm your investments. You will do very, 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 very well. You don't need nearly as much invested as you're told. So don't let yourself off the hook. That's my second piece of advice to you. One, realize it's not 2008 and calm down, okay? Look back at what you did wrong. Two, don't let yourself off the hook. If you're caught right now, do not start making excuses and saying how nobody knew this was coming, or you meant this or you meant that or whatever. Just admit where you went wrong, okay? That's the second piece. And the third piece is make the big adjustment that you need to make. If you were being greedy and you were just riding this trend and you thought you knew what you're doing, and all of a sudden your Fibonacci doesn't mean anything and your moving average doesn't mean anything. And this is what I warn about with indicators. They mean nothing. They're nothing. They look backwards, okay? Those indicators are lagging indicators. They mean nothing about future price. They forecast nothing. Now, if you can accept that, and you can realize this isn't just a one-off. This isn't some fluke. This happens all the time. That's why guys like me that have been doing this for 25 years are always preaching this stuff. And there's not many of us, because a lot of guys like me don't have an interest in helping others succeed. They just make themselves succeed and they avoid the drama. I am trying to help others succeed while I succeed. So understand, okay, I had it wrong, right? I was told it worked. It's been working for 4 years, but oh my God, I am down 700 basis points in my futures account. I've just blown up every option contract I own, or whatever the case is. And now start to figure out what you need to do. Now, what I do and have been doing for 25 years, and please feel free to scroll through my Twitter. Here is my Twitter handle. I never changed it from what Twitter gave me. It's just Derek Me 752-63605. I never changed it. There's my LinkedIn, Honest Trader, my email, dmiller@promethean investing. Start to understand that you need to understand the 3 pillars of investing. Okay, all 3 pillars: risk management, cash management, and investment management. For example, some of you that are in options and futures don't belong there. You're not ready for that yet. That's investment management, okay? What type of stocks are you ready for? What should you be invested in? That's the investments themselves. Like, for example, if you were not knee deep in 20-year treasuries right now, I don't know why. I have from 2 weeks ago or 3 weeks ago, and feel free to pull it up. I said there was the biggest move by professional and institutional money managers into the 20-year treasury that I've ever seen. And if you look at the ETF TLT, I say you should be buying this thing by the truckload at 91.80. I think it's sitting at 98.80 right now. And that has nothing to do with this morning, because I'm not looking at futures of the 20-year treasury. And even if I was, I couldn't equate that to TLT. Let me see if there's any pre-market trading on TLT, and I'll show it to you. I have no idea. I have not looked at this. I do not know. Let's take a look. So NASDAQ's down 526, 425. Let's go to TLT. Now, this is what I mean. Okay, so pre-market, it's up 1.5. So it's almost at $100. So I don't know what it was, like mid-July. It was 91.80. It's obviously somewhere right in here, right? So when I tell you that my portfolios are neutral, for example, on this, I think you get like 4% from this as well. And it's now up 10% from where I bought it, 9% from where we bought it. I'm not telling people to miss out on gains. I'm not telling you to play it safe like you're a retiree. I'm telling you, be intelligent, move where the money moves in a market. That's what you should be doing. For example, the sun's coming up, so I really have to try to keep this motion detector light on. On TLT, let's run back to it. Let me show you something. Remember how we were just looking at what it looks like when there's a crash in the market and all that volume sort of blows out the previous volume? Well, this is TLT, and it came from like 180 or something outrageous. There it is right there. So here we go, 172. This is back in June of 2020. By the way, I have not bought this or owned this until it would hit $91.80. So we're going to go, what we're going to watch is this volume. Okay, it looks like there's an increase in volume there. Still going, still going, still going. Volume's pretty steady, right? I mean, that's pretty steady. Wait, there's something. This is something. What's that price at? 84.26. Isn't that interesting? All of a sudden, there's a mountain of volume. Now, this resembles 2008. 2007. The only difference is this is after price has fallen from 180. And look at the volume, absolutely dwarfing the background. Dwarfing the background. Now, it'll be one thing if I hadn't been sitting here telling you to buy TLT for the last month, but I have been. And I myself buy it for my own portfolio. And look at volume. That is the reverse of 08. That is after the market has dropped 50%, 60%. And now here you sit. You're right here at 99.64. All right. So while you don't want 2008 and 2009 to happen, you look at this. Watch this. Look at this. This is August of 23. Ready for the volume? It is not a little thing that occurs. Look at that. Look how it adjusts volume straight down. That's how much volume stepped in September of 2023. This have been getting involved in since September of 2023. Or no, not professional money managers. That's the wrong way to put it. The intelligent guys, institutional money, the guys that run the world. This is where they're putting their money. This is where they've been putting their money. So don't listen to anything about the U.S. collapsing. I assure you, they wouldn't be putting all of their money into the 20-year U.S. Treasury if their concern was a U.S. collapse. Okay? Now, the key to all of this is that you now make the adjustment and understand I have been following. What is going on here? It's not working. I have been following the wrong guys. That's all. Look, I wasn't set up for this. I should have been. There are people out there that did see this coming. This wasn't a hidden thing, right? You could have been buying that treasury, right? Don't compound your mistakes right now, though. I'll tell you that. And a lot of guys, don't buy this morning. It's too scary. If you are stuck in this, if you had nothing on the downside, and the market is now down 10, it's down probably about 15% from the highs. You have to buy if you're stuck in this trade. Because the market is going to rally back to the Qs at 490. Now, your downside right now is at least 400. Like at least 400, possibly, because trend followers are funny creatures. And shorts and put guys are funny creatures too. If anybody was short or had puts coming into this, and a lot of the guys jumped in way late. I saw them jumping in on Friday. They're going to claim that they were heroes, but they'll miss this whole thing anyway. They won't close out. They'll dogpile on, and the closeout could cause a spike to 490 in the next week. That's the truth. And also, that may not be what happens, but your portfolio can be set up for that. You have to understand the 3 pillars, though, for yourself. I put out a lot of information on my Twitter, and my accuracy rates are